Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. The new recommendation last night was to get short the market. I still believe there's more downside here, but not everything is going to go down. So there are some longs, some things that we want to hold on to. Um, and with that, I wanted to get into a change of rating on going from a buy to a neutral on Chevron, and while I'm still extremely bullish on oil, this has gone pretty far, pretty fast, and we're getting some signs that it's overdone on a short-term basis. So let's get into it. So this is the chart. We had a 1, 2, 3 year symmetrical triangle textbook. Here's where we went long. And the price projection based on this pattern, you measure the base of the triangle, you project upward is 212. We got to 187 today. On this high, we have no negative divergence. So when this current high, we got confirmation on that high. This is a weekly chart, so each one of these bars represents a week of price action. So I still think there's, a good chance that there's more in this. But on a short-term basis, I think there could be a pullback, 3, 4, 5% or something. So right now we have a gain of 18%. So we're going to book that. I'm keeping out of my position, which was fairly large. I am going to keep a third of my position. And if we get a pullback on down days and on down days, I'll be gradually adding back in. Let's take a look at the daily that focuses on this part right here. And this is what got me to a neutral rating. After hitting some highs here, we got confirmation. We got higher highs on our relative strength index, confirming those highs. This is on a daily chart, so each one of these bars represents a day, whereas the previous chart, each bar or candlestick represented a week. So this is a shorter term time horizon. This goes back about 6 months. The prior chart was like 4 years. But on the high today, you can see we're getting a lower high on our relative strength index, and that's flashing a caution sign to me. Beware, a change of trend is coming, some sort of a pullback or correction. So, and this candle today, if we close here later today, I won't be here for the close. So I wanted to get this out to you. This is called a shooting star, where we gap up. It's kind of an exhaustion gap where people that haven't been in this all of a sudden want to get in. They're finally hearing about oil. It's a hot place to be, and so when I have that, uh, when that's happening, that's when I like to quietly lock in some profits. But this is called a shooting star, where we have an exhaustion gap up. We trade intraday, you know, 1.5% higher. And then if this closes around where we're at now, that would back at the low of the day, that would be called a shooting star. And that just psychologically, it tells you that there were some people that jumped in here, they didn't want to miss it. And some of the smart money started selling. So we're going to just book our profit. Let's take a look at the point and figure chart. Here's a point and figure chart, and anything, a column of X's of 10 or more is called a pull, and a pull suggests overbought. Well, we certainly have, I don't know how many's in here, maybe 20. And so this is definitely overbought on a point and figure chart. And on the point and figure chart, the price projection is only 201, and we hit approximately 190 today. So there's only, based on this, there's only like 5% potential upside, whereas on my more subjective charts at the beginning, it's more like 10%. So I'm just going to be cautious here. I'm expecting the market to go down. If we had a really big down day, most everything will be down. So that's kind of the thought process. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Tell your friends and family. Have a great rest of your trading day. Adios.